Hey, everybody. Welcome, welcome. I'm going to give you guys a few minutes, like usual, just a few moments, rather. But welcome, welcome. I am going to connect with Instagram. Let me see if I can add Instagram to here to the live. Yep, I can. Great. All right. Instagram, take off LinkedIn. hmm So you guys hop on in. Be sure to let me remove this from LinkedIn. Be sure to comment. Just a reminder, you guys, that we are not talking on whatever platform you're watching us under. We are on StreamYard. So if you want to leave a comment, say something, post, and you want your name to show, be sure to just check out StreamYard. If not, you can still comment. We'll still see it. And wait a minute, why isn't it not letting me go? There we go. Okay, we're officially live on Instagram. Cool beans. But we'll still see your name. It will just say whatever platform you're on. Don't mind my hair, y'all. Y'all know I was doing videos all day. I'm looking a little rough. I got the grandma wig on. It's okay. We're gonna move forward with that in life. It's fine. All right. So all right. So this is our moderator, Sean, in case you didn't know. This is our moderator. So
Hey,
it's
moderator.
MWD. Yes, I don't know um who they are. I forgot. I don't know if it's a client of a former client. I don't know, but they're riders. Every time we're live, they're live for the most part. So that's pretty cool. But anyway, let me just give my formal introduction and let's get started. Hi, everybody. This is Tamaya Robles. I am a credit repair expert. I am the owner of FixMyCreditNow50.com. I am the host of this podcast, Coast to Coast Credit. Did I say owner fix my credit now if.com? Okay, that's who I am. And we are doing our weekly segment, Ask a Mortgage Loan Officer with Sean Rogers. And Sean, welcome. I am officially leaving the floor on to you.
Awesome. Thank you. Thank you, T. Thanks for having me on. So there's a
Mhm.
couple of topics I wanted to bring up today. That and this is based upon what I see on a daily basis and some myths I need to put out there. And I'm always seeing all types of little TikTok reels and Facebook reels about income and what it really takes to buy a home, depending upon where you live at. So, as we all know, inflation has really whooped us past couple of years. It's been intense, right? And hopefully there's some relief on the way. Everything from mortgage rates down to groceries, right? Gas, whatever it takes, right? Eventually, it's going to come down. Things are a little bit softer, but as of right now, here's what it looks like. Here's what it looks like, or what it takes to buy a home in major metro areas. Now, this will vary from place to place. The same amount of money that's going to cost to buy a home in Los Angeles, California, as opposed to buying a home in Jacksonville, Florida, will differ. And that's based upon purchase price, also wages in the area. So let's start with some of our major cities. So let's say that someone's buying a home, we'll call it Chicago, Illinois. Let's talk in the Midwest, Chicago, Illinois, right? So in Chicago, you can still find a decent home for close to, I would say, sometimes between 200,000 and up, right? And guys, I'm saying that amount for what we call starter homes. So your basic 3-bedroom, 2-bath, maybe 1,500 square feet to 2,000 square feet, depending upon what you may need, or your familial size, right? But most of those homes will probably go for close to 200 grand or above. You can still get some of these for $250,000, $300,000, right? Now, also I saw another post, and it was saying that United States single women have surpassed home ownership for single men. That's a whole other talk we'll talk about some other time, right? But what I'm referring to is the fact of buying a home with a single income. Okay. Now, of course, when we look at what we call the debt to income ratio, okay, when we look at the debt to income ratio, we're going to take into account all of your credit based obligations. So, whatever we see on the credit report. So, we're not talking about your gas bill, your lights, your car insurance, cell phone bill. We don't look at any of those things. What we look at are your credit-based obligations, your car payments, credit cards, student loans, right? So forth and so on. Things that appear on your credit report, that's what we hit you with. In addition to, any child support or alimony payments you make, or something along those lines, past due income tax payments, federal taxes, state taxes, etc. Right? We look at those items. We don't look at your regular monthly bills. Now, back to the point at hand. I get a lot of calls with people trying to buy a home and they're making sometimes between $18 and $25 an hour. All right. So I'm going to look at areas that could have a higher cost. Chicago, Illinois, Houston, Texas, Atlanta, Georgia, Jacksonville, Florida. It's harder to buy a home with one person making that dollar amount range of income, right? Extremely hard. For example, let's say somebody makes, we'll call it $25 an hour, and they work 40 hours a week. Okay. That's about $4,300 a month in gross income that I would use to qualify you. Now, I can only use for the housing obligation itself about 46.99% of that $4,333 a month. Once again, gross before taxes and all deductions. Okay. Now that means the max mortgage payment that I can take is about $2,000 a month on paper that we can afford. $2,000 a month. So that $2,000 a month has to include principal, interest, property taxes, homeowners insurance, possibly mortgage insurance, and any homeowners association dues. Okay. So let's take a look. What would it look like in most areas if someone were to buy a house and they made $25 an hour at today's current interest rates for most of the country? How much house could they afford? Let's take a peek. I'm doing a quick calculation right now. That would probably put you at a purchase price of about $250,000 on today's money. Okay, $250,000. Now, there are a lot of areas in America that you can buy a home for $250,000, right? Mm-hmm. But I'm not talking about some of the major metros, Seattle, Portland, LA, anything in California for the most part, Las Vegas, Phoenix, Arizona. You can still find homes in Texas, in the outskirts of Dallas, Texas, Houston, Texas, San Antonio. You still find homes for that amount, right? In Atlanta, Georgia, around the area, Alabama, South Carolina. There's still places in America that you can buy a home for, $250,000, $240,000, and it's still a decent property. I see a lot of news reports every day. The average home price in America is $400,000. Okay. So it makes people believe that I don't have the money to pay for a house at $400,000. Right. But for a lot of Americans in the US, 400 grand is a lot of home. Right. But you got to take into account, the areas they're looking at: New York, Chicago, LA, Seattle, Vegas, right? Phoenix, parts of Houston, Texas, right? And that could be the price point for some of the more desirable homes that people see, right? However, let's also keep in mind that those aren't a lot of first-time home buyers either, right? Just because this is your first house doesn't mean you can knock it out of the park, right? You can pick up a decent home for $225,000, $250,000 in certain parts of America. Not all. And there are some areas that $250,000 is going to just kill you. It's going to crush you, right? You won't find anything at all. But you still can find in certain areas a price point for that amount. Now, let's discuss dual income households. So this is where it gets pretty, right? Two incomes is always better than one. And I don't mean that I want you guys to go out and get married or get a boyfriend or a girlfriend or a partner just to buy a house, right? That's a recipe for disaster. But if you do go down that road, right? If you do go down that road, you will be able to pick up, of course, more of a stronger purchase price if possible. Okay. So let's say we have two people making $25 an hour. Okay. So total monthly, my gross income is about $8,600 a month. Okay. So now my max payment goes up from $2,000 a month up to about $4,000 a month. Okay. Let's look at what that would be on $4,000 a month in a few areas. So let's say the max monthly obligation is $4,000 a month, which includes principal, interest, property taxes, and homeowners insurance. Let's take a peek. So let's go here. And let me adjust the property tax rate to allow for some variances. That will give you a home price on today's money, today's rates of about $500,000, right? So effectively, we've doubled how much we can buy. Now, it didn't take into consideration if this couple or this person or these people had student loans, credit card debt, car payments, right? I didn't take that in consideration. But for some of the houses that I get calls about every day are my clients' taste buds, right? What they think, what they deem as nice and acceptable, or they want their first house to be their last house, which is not something that's possible these days, but that some people like that, right? Or they feel that they may have grown out of or moved, they're past that point in their life where they need a starter home, but they've never owned a home before. But now they feel like they have to start out up here as opposed to down here, right? If you're in that category, you're looking at that 500,000, means once again, looking at making $25 per hour, right, would afford you a decent home. Okay. Now, once again, I did not take into consideration any car payments, student loans, things of that matter. So based upon today's economy, what I'm saying is the point I want to drive home is based upon today's economy, your dollar will go farther with someone else. Now, I know that not everyone has a partner they can rely on or a partner that'll help them buy a house or go in with them on a house, right? But ideally, today's interest rates, right? Today's money, cost of living, right? And home prices, right? Two incomes will get the job done as opposed to just one. Don't forget, on an FHA loan, you can have, I think, up to 4 people on one FHA loan, up to 4. And I think for Fannie Mae, it can be more than that. But FHA, I think you can do up to 4 people on a home loan. So if you want to apply with your partner, uncle, mom, dad, or whatever, we all can chip in and go together on the house and buy a great big house in our area if necessary, right? Generational living, right? That is still a thing. Okay. So the point I want to drive home is this. If you're in a major metro area, it is going to be difficult for you to buy a home on a single income and you're in the 25 and below range. Very difficult. Once again, I'm excluding California. It's most of the areas in the West Coast, but more East Coast, Middle America. This rule pretty much applies. It can be somewhat hard to buy a home if your income is not, between $22 and $25 an hour in a lot of areas. Okay. Oh, there's a question here. Rehab loans, construction loans for multifamily side, like 10 units. Okay. Let me address that really quick. So with the rehab loans and construction loans for multifamily, as far as 10 units, anytime you go over 4 units, right, that gets into the commercial world, right? So when you get to the commercial world or the commercial side of things, as opposed to residential, they look more at what is the end result? How can the property pay for itself? What is the intent of the property, right? So if somebody's purchasing a multifamily, we'll call it multifamily residential, that's 10 units, obviously that building is going to produce income. They want to make sure that the debt is being serviced. In other words, we want to make sure that this house or 10 unit that you're building okay, will generate enough income to pay for the debt itself. It doesn't go off the personal credit as much. It still can be a factor along with experience, but it doesn't go off it as much. Also, when you're doing something like this, it's usually between 25 and 30% down. Okay, a little more expensive to do, and this is for investors, but you can acquire land, the lot itself, and the right to build, the money to build, all in one shot at closing. It is possible, but it is 25, 30% down. They may want you to partner with someone that has experience doing these things. Also, your idea or your building that you're gonna create has to be able to service the actual debt. So once again, they're not looking at your income. They're not looking at where you work or what you do for a living as far as your income is concerned. They are looking at the actual asset. Can the asset cover the new debt that you're making? Okay, that's pretty much it in a nutshell. But it is possible to do. Very possible. Not very hard at all. Requires some planning, professionalism, a little hard work, but it is possible to definitely do on the commercial side, of course. Okay. Hope that answers your question. Speaking of construction, let's move on to the next thing I wanted to touch on was the 203K loan. Tamaya, the 203K loan, I think, is a very underutilized, overlooked product. And I like the product. Let me tell you why. A lot of us out here, we like new shiny box, right? We love the new, shiny, good looking stuff, right? We love that. And it's in our nature to love beautiful, shiny things. It's great and everything, right? There are a lot of homes out there that people don't want to buy or overlook because the kitchen's from 1985, right? Right. It has, burnt orange or the ugly green color schemes, right? And linoleum floors, and it's just not as aesthetically pleasing as the homes we see all over the internet and these new builds, right? But a lot of these homes have really, really good bones, right? And we ask ourselves, where will we get the money to rehab this property? We can loan you the money to do that. It's called a 203K loan. So here's how it works. There's two types of 203K loans, okay? There is the 203K full and the 203K limited. So with the limited, you can get up to $35,000 to do what they call cosmetic rehab. So we want new appliances. We want new countertops, new flooring, new windows, right? We want new bathroom, new kitchen, right? Just overall make it look good, right? Right. And you can get the money to rehab that. So what we do, we give you what we call an after repair value. So ideally, here's how it works. Let's use some round numbers here. Let's say there's this house that's kind of beat up on the inside, it's a little bit older, and based upon what's selling in the neighborhood, everyone else's house, is newer or fixed up or whatever the case may be, right? But this particular house is kind of run down. It's older, still in good shape, right? Livable, habitable, right? But it's not as aesthetically pleasing. There's no upgrades, no recent upgrades to the property, right? And let's say the house is selling for $200,000 right now. Meanwhile, everybody else is at 252 to 275 or a much higher number, right? Because their house is redone and all nice and everything, right? So we can give you up to $35,000. So we're going to appraise the property and give you what we call an as-is value. Okay, which will probably meet purchase price or lower. Okay, an as-is value, right? And then we'll give you what we call an after repair value, right? So ideally, the repairs that you're going to do to the property will increase the property value. So we'll include that $35,000 into your loan. So you're going to buy the house for $200,000, but we'll give you a loan for probably $230,000, $235,000 or something like that, minus your down payment of 3.5%. Okay. Is based upon the actual sales price, right? So you can do that, and the repairs will take no more than 6 to 8 months to repair or do the upgrades, and you still live in the house while this is going on. Okay, it's not a hard loan to do. All you have to do is find a licensed contractor. Now, check it out. There are some states that GCs or general contractors don't have to be licensed, bonded, or insured. Some states require, right? However, if you're in a state that doesn't require the GCs to be licensed, bonded, or insured, they will not work with the lender. We require a licensed, bonded, and insured contractor. Okay. Now I get it that a lot of people that can do things for the cheap, they're not paying the cost for that because it can be somewhat expensive. I understand that. Be that as it may, that's still what's required. Right. So you have to find somebody that's qualified to do this. The 203K loan is not hard to do at all. It's a little bit longer to complete. Usual close of escrow is about 20 to 25 days. This may take 35 to 45 days to complete close of escrow, right? To you get your house keys and start doing your work. Only because there's more parties involved besides the basics, right? More people are involved in this situation, so a lot of back and forth, but it can be done. Now on the 203K full, this is a whole other ball game. So the 203K full, basically you can take the house down to the studs, get new electrical, new wiring, things that require permits, new plumbing, right? New roof. Sometimes you can make structural changes with certain lenders, right? But it's anything above $35,000. So we have a whole project we want to do, right? We can definitely do that and cost more, and we include that into the after repair value. Okay. Now, there's some things that you cannot do with a 2 or 3K full loan, like you can't build luxury items like a pool. You can fix a pool, but you can't build a new pool, right? But they can pay for everything from the sidewalk to the doorknobs to the backyard, everything, right? Just got to make sure it fits inside the budget. Now, the 2 or 3K pool is a little more tricky. More people are involved. You have what you call a HUD consultant. The HUD consultant's job is to consult with the contractors doing the work to make sure they're doing what they're supposed to do, and to make sure that this is feasible. They'll do what they call a feasibility study to make sure that, okay, if we add $100,000 in repairs to this house, is it going to be valued at that amount? Is it worth it? Is it going to work? Right? Also, that's a fee that you have to pay to them too directly. It's about sometimes between $800 and $1,000, but they communicate with the lender and the contractor to make sure everything is done in accordance with HUD guidelines. So this can be a home that is non-habitable. Okay. Now, while this is going on, if a home is deemed to be non-habitable, we will finance up to 6 to 8 months of payments for you into the loan. So you're not paying while you're not living in the property. Does that make sense? You're not paying because you're not living there. It's financed as part of your loan. Okay. So don't worry about you having to pay 2 mortgages at once because that part is being financed. Okay. But the 2 or 3K loan can get pretty intensive, pretty deep, just depending upon what you're looking to do or the shape the property is in right now. The rehab loan, another word for it, can be used for VA and conventional financing also. Okay. Don't forget that. So veterans out there, you guys want to use your VA loan to do a rehab, totally fine. You can do that. 100% financing. Okay. Once again, a lot of loan officers don't touch this loan because it's so many moving parts. It's so detailed and get real tricky real fast. Right. So mostly I see only veteran loan officers doing these loans because a lot of time goes into these kind of loans, but it is possible. Also, you can do, I did one of these last March, I think. I completed a 4-unit quadplex FHA rehab. Okay. So this guy had this quadplex. There was a guy that had owned the quadplex, the 4-unit for a long time, and it was run down, right? Picked it up for a pretty cheap price. We put like $28,000 into the units, and now he was able to increase the rents and make more money. Okay. But he got it for the cheap, did a little work to it, and boom. Also, you can get down payment assistance on a 203K rehab loan. Don't forget that either. You can do down payment assistance on a 203K rehab loan. Okay. Don't forget that.
Sean, can I ask you a couple questions? I'm sorry.
Yes. 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 Yes.
You're on a roll, but I didn't want to cut you off, but I didn't want to forget either. So
It's
I
okay.
do have I like two questions. So one of them is can you um use that type of loan for investment properties? I don't know if that's possible.
No, not the FHA based 203K loan. No.
Okay. 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 And then another question is so, well, I'm going to talk about. So, I told you earlier, I did a live and I was talking about one of the reaction videos we were watching was them basically saying how rent is scarce and people that are applying for Section 8 base, they can't live, or Section 8, they can't live where they want to live, affordability, this, that, and the third. My suggestion was telling people fix your credit and get a fixer upper. And I think before when I bought my first house, you recommended that. But is it true that you just need a lower credit score as opposed to a standard FHA? And I think you're frozen.
There we go.
Hope you're not frozen.
Okay.
There
Okay.
we go. Okay.
Okay. The question was the credit score requirements on 203Ks.
Is it
Okay.
lower than usual?
No, it's depending on what I'm doing. So on a FHA 203K rehab, I can go down to a 580 credit score. Okay, 580. It has to be 580 or above. Now, if I'm doing a VA rehab or renovation, it needs to be 620 or above. But for FHA, I can go down to a 580 score. So it's still basic. With my lender, still a basic credit requirements in line with FHA.
And what about lands? Like I'm so big on land. Like I can live in a fixer upper, but I would be more inclined to go in that direction if the land it was on was included. Like I don't know if I do go down south and I find a fixer out upper and it's sitting on 3-4 acres of land, is that something that would be allowed under that loan?
Oh, most definitely. Yeah. So as long as
Okay.
it's on the same parcel, right? You're buying it all in one legal parcel, legal tax ID. Yeah, you can pick up 10, 15, 20 acres, depending upon what the comps are in the area. So, and when an appraiser goes out, because that's going to hold value too, right? That has a lot of value in the actual land that the property sits on. So as long as the appraiser can go out and say, okay, these other 3 or 4 sales here in the past year, or sometimes about a year, and maybe they're probably, I don't know, sometimes a 15, 20, 25-mile radius they can go out to because it's rural, right? So yes, you can finance a lot of acres if it's consistent for the area, right? But I think the case is, I think the first 10 acres or 20 is when they look at. Anything after that, they may not assign that value. Just got to be careful what you buy and how much land with that actual property. And keep in mind too, for a lot of areas that are rural can do USDA financing, which is 100% financing, right? That is possible with a lot of land too. But it's tricky because USDA is very income driven. It's kind of a quote unquote low income loan, but they have tight debt ratio requirements that I'm not a fan of. Doesn't make sense, but the ratio requirements are very, very, very tight.
Okay.
Yeah.
Thank you. Those are the questions.
Yes, but to answer your question, yes, that is totally possible. Okay. So yeah, so 2 or 3K loans, solid loans. I really wish people would look more into that. Not that you have to do the work yourself. A lot of folks think they got to do the work themselves. You're not lifting no hammers, putting no nails, no sheetrock over your head, trying to no none of that stuff. You're not doing a thing. Someone else doing all the work for you. All you're doing is moving in. You're telling them what you want. It's pretty much it. You're basically placing an order. That's pretty much the gist of it. They just make your idea come alive. That is all. Keep it within budget, and you're good to go. So, but yeah, people don't want to do that these days for whatever odd reason. And I really wish more of my people would look into doing or utilizing the 203K rehabilitation program, either full or limited, because you can really
Mhm.
take a undervalued, underperforming asset house and turn it into an appreciating or overvalued, not overvalued, but valued asset with upside to it, right? But
Mhm.
I don't see
Mhm.
that. But that's something that people need to really look into. All right. Um,
Mhm.
were there any more questions in the comments? I have one more thing I want to touch on that I get a lot of too. Okay.
Mhm.
Um,
Not necessarily, just more of a comment. NWD, our moderator just said down payment assistance on a 203K loan, so I have to live in it. LOL.
yeah, that's right.
Mhm.
All right. So home types. Let's look at home types that you can buy or finance. Okay. Tiny homes. Tiny homes. Tiny homes can be financeable. Okay. However, the appraiser, and this is on a standard loan, the appraiser has to have comparable sales. Remember, what is, let's see, there's a square footage limitation. Um, let's see, I think it is 400 square feet. Yeah. So an FHA home to be financed by FHA has to have livable square footage of at least 400 square feet. 400. So
Mm.
how big are tiny homes? Well, more than 400, because 400 square feet is about a bedroom or two. Is that right?
Yes, but this is like the new wave. Like, matter of fact, I'll probably do some reaction videos on it. Maybe
Mm-hmm.
you should do some. Matter of fact, we're going to talk about, I'll bring up some reaction videos now so we can see. But it's not what we used to think of back in the day, where it's just this trailer when there's toothless people rocking in the rocking chair in the dirt. It's not like that. Some of these tiny homes are luxury tiny homes, right?
Mm-hmm.
And they're going up, not out, too.
Mm-hmm.
You know what I'm saying? So I know I want one after the kids graduate and all that. I'm shooting for, I gotta learn modular tiny homes, such and such. I know there's like a list of them and they're all different. That's what I'm shooting for. A tiny home with a little porch on the top, maybe have a bunch of tiny homes on a plot of land, but I'm
Mm-hmm.
not sure how much they are. But as you talk, I'm gonna look up some videos, like quick videos, so you can see.
Okay. Okay. Got it. Yeah. So tiny homes, if the appraiser can find comparable sales, and keep in mind you have to own the land that the property sits on, and it must be permanently attached to the foundation, just like a regular house, right? So, yeah, that is possible as long as it's 400 square feet or bigger. You should be good to go for a tiny home. Now, I don't know. We'll probably find it, but there could be tiny home communities, and sometimes those communities, because they're so cheap, you don't own the land that it sits on. Like there's no subdivided parcel for that little piece of house, right? Which can be a problem when it comes to standard financing. Uh, they may not even call that an actual home because it may not have an address. Keep that in mind. But if this was somewhere out that you own the land and you want to build a tiny home on it, you could possibly build one there and use FHA financing to achieve that. The only other problem is the dollar amount of these homes can tend to be sometimes unfinanceable, only because we would enter into a high cost threshold. Most mortgage loan officers that work as broker or direct lender, um, we have to abide by certain matrices. I would say if the fees of the transaction exceed sometimes 3 to 5%, it can be what they call a high cost loan, which is prohibited. We can't do a high cost loan. Those loans may fall under what they call a portfolio loan, which are done by banks, and they may not deem the property to be an actual single family residence, may call it some other kind of signature loan of some sort. But that would be the only real hurdle getting around when it comes to these tiny homes is the dollar amount of these. If they're like 30, 40, 50 grand, that could be hard to finance. Usually anything above 75 grand, I can make happen. Sometimes below 60, but it just gets tight and sticky. Okay. Um, Another thing I want to touch on is our barn dominiums. Barn dominiums. Have you seen those, Tamaya?
I've never heard of that. I'm curious to know what you're talking about. I think I might know what you're talking about, but I gotta hear it.
Okay. So it looks like from the outside, it looks like a barn, like an old, barn you see on the cartoons, the red
Mhm.
triangle, whatever, it's a barn, right? But on the inside, it's laid, right? It's a
Okay.
huge open. I've seen them like a lot of, I've seen a lot of bachelors have these barn dominiums, and the floor, right, is just concrete or whatever, and they park their cars in there, and they have a loft for a living space. The little loft
Mhm.
contains a bedroom,
Mhm.
uh, a kitchen, bathroom, shower, right? The basic needs that we need as men, but everything else below that is our toys, right?
Mhm.
I've seen
Mhm.
a few like that, but that all are not built like that. I'm just using that as an example. But barn
Mhm.
dominiums are also financeable as long as we can find comparable sales. We just have to find another one that's sold within I think between a 5 and 15, 20-mile radius.
Mhm.
Okay. If we can
Mhm.
find those, um, they're totally financeable. Totally financeable. So
Mhm.
if you are into that
Mhm.
kind of thing, barn dominiums, yes, you can definitely finance those through standard channels, conventional FHA, USDA, as long as the appraiser can find comparable sales. Now, as far as building one yourself, um, those can be taken on a case by case basis. The main thing they look at is resale on those barn dominiums. If you're trying to build a barn dominium in an area that has no barn dominiums, resale and comparable sales will be very poor. The bank wouldn't take it. So
Mhm.
I have yet to get one done on the construction side. I haven't tried.
Mhm.
But when somebody had an inquiry about it, the lender told me like, yeah, we can take it on a case by case basis. It depends upon the profit of the loan. Also depends upon the buyer, and mainly depending upon where this can be placed at, because they want to look at comparable sales in case the borrower defaults. How fast can they offload this liability? How fast can the bank sell the property back to get their to recover their losses? That's the main thing.
Mhm.
Okay.
Now I was able to pull up a video. This says if it's a short video, so I was gonna share it. Is it
Yeah,
okay
let's
if
take
I
a look.
share it right now?
Let's take a peek.
Okay, let me just see. So this says, and I gotta blow it up. The title, let me make sure I give credit where credit is due. 8 affordable tiny modular homes under 50,000. Modular homes and tiny homes. That's the name of the channel. So let me blow this up, get it off mute, and then we can take a look at it.
Welcome to my channel, where I offer you the greatest advice and ideas for living in compact spaces. I'm going to show you some incredible examples of small modular homes in today's video that are
Those are
not
nice.
only affordable and comfortable, but also reasonably
Yes.
priced and simple to construct.
I want to
These
do
small
this.
modular homes are prefabricated buildings that can be assembled and delivered to the location. Anyone who wishes to live simply, minimalistically, and with minimal impact on the environment should choose them. So make sure to watch this video through to the end if you're interested in learning more about the appearance and price of these tiny modular homes. Before we begin though, please make sure to click the bell icon and the subscribe button so that you can be notified whenever I post a new video. Please give this video a thumbs up and leave a comment below if you find it enjoyable. I'd be delighted to speak with you.
Look at
Let's
that.
get going.
That is
A
nice.
tiny modular home. What is it? One kind of prefabricated home that is especially made to fit in a small space, typically less than 500 square feet, is the tiny modular home. Built in factories, modular homes are disassembled into sections or modules, which are subsequently transported and put together on location. Compared to traditional site-built homes, this process offers greater efficiency, customization, and quality control. There are many companies that offer tiny modular homes in different styles and prices. Here are some examples of the best tiny modular homes under $50,000 that you can consider for your own home. Voss by the Bunkie Company.
I don't want to go
The
that
Voss by the
small.
Bunkie Company is a 106 square foot module that can be used as a
106
studio,
square
office,
feet.
or guest room.
Wow.
It features a kitchenette, an
No.
It's like a
optional
little
add-on,
office.
a bathroom, another optional
Yeah,
add-on,
yeah.
and a sofa bed. It comes with pre-finished.
But imagine having this office like in your backyard, like you do have a couple acres, or you have like, I don't know, like a plot near the river or lake or something like that, and it's just your little section. I could see that. But
Mhm.
mine has to be bigger. Like they have somewhere. These are tiny ones. Maybe I need to find a bigger one. But just modular homes, they're not 50,000. They're in 100. Some of them, like competition wise, they've gotten so popular that matter of fact, this lady, she's a master of it. What is it? Let me share this with you. Hidden cost of modular manufactured home. She breaks everything down to a science, but they have it where it's actually almost like buying a regular traditional home,
Mm.
cost wise. Yeah, cost wise. Yeah. Hold on. Let me try something, because that guy was talking about tiny homes. I don't know one person asking
It's
for a
pretty
tiny
obvious
home.
to know the difference between a mobile home and a manufactured home if it's an older one like this. But companies have gotten pretty sneaky. And you're going to need to know the costly differences between mobile homes and manufactured homes, whether you're buying a brand new one that's already existing that's for
See that?
sale, or you're trying to
You
find
see?
yourself a modular home, which is a completely
Mhm.
different home product.
Today we're
Yeah.
going to be going over the biggest differences between
See, those type of homes are big in Florida, I heard.
Right.
This, I don't know if that helps or not.
across. But this is where the confusion comes in. You've also might have seen one more product that they've just introduced, which is a modular manufactured hybrid. Don't be fooled by that, please. It's not the same thing. When making a decision when it comes to manufactured or modular homes, if you're really focused on the price per square foot, you're probably going to want to go with manufactured. Price per square foot, manufactured homes go between as low as like $76 up to about $200 to $300. And I know you're probably like $200, $300. This, of course, is depending on the area that you live in. Just like anything you buy in real estate, price per square foot is going to make a difference in the location that you live. Now, when it comes to modular homes, because they are identical product to a stick-built home, price per square foot in most cases is going to be the same as a traditional built home. And you're probably wondering, why would I go with a modular home if it's going to be so much more expensive? Because it is built to specific building codes.
That's what my clients are asking for. That's what they're interested in. More and more. Not all of them, but more and more.
More
They're
modular.
In line with traditional home
Okay.
building. Not only that, you can get them built a heck of a lot faster than you would with a traditional built home, because once or they put down the foundation, the home comes in a day. Now, would it be as fast as a manufactured home? Absolutely not. We're talking this is going to take, at least
Right.
6 weeks to get your home together with a modular home. When it comes to a manufactured home, the day it arrives is pretty much the day they put it all together, and within a few weeks you're going to have your occupancy license. As far as time and speed is concerned, manufactured homes win on this. You're going to get those done a lot faster than you would on a modular home. Financing is a tricky subject when it comes to manufactured and modular homes. Now, you can get your FHA, your rural development, you can get conventional
This is where you come in, Sean.
That's
financing.
right.
All those loan products are available for manufactured and modular homes. So you have nothing to worry about. But the problem is the lenders don't know how to finance manufactured homes. But that's also true with modular homes because they're so confused on the terminology. They think it's a manufactured home and they don't realize that it has the same exact components as a traditional stick-built home. But once you explain to them how you're going to do your modular home, it becomes a little bit easier. Now, one thing you really should know when it comes to manufactured homes, usually the interest rate on those is going to be a little bit higher than they would on a traditional home. Not in all cases, but in a lot of cases. This is especially true if you're getting a manufactured home that's in a park, which would not be attached to land. So you would only be financing the home itself. The interest rates for those are a lot higher than traditional home mortgages. But
Okay. Can you
Right.
explain that? Can you
That's
explain it? And we don't have to listen to the whole 11 minutes. I just wanted you to get the gist of what. But can you explain that? Like, why would it be more? Why would it be a higher interest rate if we're in a modular home community? Like, I don't get that.
Yeah, because at that point the home itself is not real property. It's not real property because it's not permanently affixed to the foundation, and at the same time, well, okay, it could be, but at the same time, you don't own the land beneath it. That land is leased, right? That's called chattel
Mm,
financing, different kind of
mhm,
financing, right?
mm,
So it's more being that the land, because the dirt holds value, right? Dirt has a lot of value, and
mhm.
if you can only sell the actual manufactured home, it doesn't have that much value. That's why you see in some areas like when I was in Cali, in Las Vegas, there were mobile home um, parks, communities, I would call them, right?
Mhm,
Homes were
mhm,
nice,
mhm.
right? And the
Yeah,
homes were
yeah.
not expensive. You know, you can get something for $300,000 or 250. This is in
Mm,
SoCal a few years ago,
mm.
and Las Vegas. But the
Okay,
space rent, right, will cost you another $400-500 a month for the space rent. That's where it gets
okay.
expensive, is the actual space, the lot it sits on. But yes,
Mhm.
those are not financeable because you can drive off with the trailer middle of the night. And how we're going to collect our
Okay.
collateral if you
Got
fall,
you, yeah.
right?
Understood.
You do that.
Mhm,
But yes, she is right. It is more expensive. It's a different kind of financing.
mm.
It's pricier, but generally speaking, those loans are less as far as dollar amount. So it kind of makes up for it.
Okay. Mm, okay. Do you wanna finish watching the video, or
No, we
you
don't
get
have
the
to.
gist of
I get
everything,
the
where
gist of
she's
it.
going with it?
Yeah,
Okay.
so that makes
Okay,
sense.
cool, cool.
But yeah,
Yeah,
it's
but that's what some of the clients are asking for. Some of them, not
yes.
all, but I'm seeing it more and more in those that I remember during the pandemic, a woman asked me that, and I didn't know what it was. And I
Mm,
was thinking like a trailer, and she was like, "Yeah, I put it on land." And I'm like, "What? Like, why would you do that?" And then she showed me these, but they weren't that popular, and then they just rapidly started blowing up. So some people are coming to me with some sort of knowledge, but they're asking about the financial part of it because they want to get a loan. They're not talking about those teeny tiny houses like the first video. They just
mhm.
want something that's there, something that fits their needs. Maybe their kids grew up already, or maybe they're used to living in that type of housing anyway. And they want the land. They want it on their land, not somebody else's land. So that's where funding and stuff comes in. So yeah, it's starting to pick up.
Okay. Yeah, I mean that's the same thing as buying a regular stick built property. It's the same thing to me when I look at it, and it's
Mm,
well, what I don't know is the factory piece of it, as far as when you're at the factory and you're making your order. Okay, making your order, you say, "Hey, I want you guys to build me in this factory, 3 bedroom, 2 bath house with 2,000 square feet with a deck, or whatever." Right, and
mhm,
they bring
mhm.
it to the site in pieces. Right. What I've done, I've
Yes.
financed a lot of those over my career, standard FHA, but they were already there when I came in the picture. So what I don't know is at the factory level, I'm guessing they make the buyer put down a deposit, a decent amount of deposit, right?
Mhm,
And
mhm,
then they because they got to bring it, they have cost, right? Holding cost and cost to bring it from the
mhm,
factory in pieces, multiple trips probably, and put it all together, right? From the factory to the site, right? But I financed a lot of those over my career, the modular homes, and it went just like a regular stick built property. Same programs apply,
mhm.
same down payment assistance, totally possible.
Good.
Um, totally possible.
Okay. That's good to know. That's good to know. Okay. Thank you.
You're welcome. You're welcome. But yeah, those are the main things that I had. I didn't have much anything else. I just want to make sure I touched
Good.
upon barn dominiums and the modular homes. So if you know
Mhm,
anybody out there, especially, it's really popular here in Texas. Really popular. A lot of people are
mhm.
really getting to the whole barn dominium scene because they're pretty nice, right?
Mhm.
Depending
Yes.
upon your lifestyle and what you're used to, and also where you're at uh,
Mhm.
in the state. If you're more, it's more of a rural thing,
Mhm.
right? People have a
Okay.
lot of toys, tractors, and side by sides and four wheelers, things like that. They want to store.
Mhm.
So they put them right in
Mhm.
their house. Oddly enough.
Snap. That's crazy. That's crazy. That's crazy. Well, maybe you could do a reaction video on those, or where you're showing videos, you know what I mean, and
Yeah.
explaining it to people. That'd be pretty cool. Um, we are wrapping up, my great moderator. This is one of his comments, he said, "My old childhood home in Inglewood, California, selling what?
Wow.
Selling for what, man? Please,
Woo.
what? It was only 250K.
Mm,
That's how that's how things are going now. Like
right.
that's how things are going now. Like real fast, this house that I bought, I went, my first house was with you in Maryland. What was that? 350-ish, I think I got that house for. My mortgage was about $1,400. I come out here and I have my house costs over $500,000 and my mortgage payments are $4,000 a month. Listen, I know, I know. Bless my little heart. But I am a credit person. So,
Right.
I know how to, but I don't want to be tied down to anything for so long. But I'm in California, the city that I'm in. I know it's up and coming. This used to be a dead town, so to speak, like a sleepy town, respectfully. It was a
Mhm.
sleepy town. And then, builders are coming in. So their 20-year plan is actually coming to fruition. So I know I bought it for that much. If I hold on to it tight, hopefully I can have those similar results that MWD had with his childhood home. But
Right.
another thing that's big out here that's new to me is I live in a new home development. And so these are the first homes that were built. People moved in, but honestly, I think I started seeing people move out 3 months later, which was shocking. I'm like, well, maybe it's the price. But I also see people leasing the house, doing Airbnb.
Mm,
And it's a thing where they rent out the houses. So I live in a 3 bedroom. So it's like the master bedroom and then the two small bedrooms. They're
mhm.
renting those houses out, like those rooms out for people. And I said, oh, and they're starting off like 2,500 for a master bedroom with a bathroom included. I'm like, word, word.
Wow.
That's what we're doing on these streets. Like you gotta think, I guess they're looking at it like, well, go get a better apartment then if you can't deal with it. I don't know what the logic is to that, but whatever it is, I am going to do everything in my power to maintain this house. But after about a year or so, I'm gonna keep my ear to the street regarding the market. But I'm
Mhm.
gonna sell it. Hopefully, I can get a good profit for it, or I will rent these rooms out. Like, what do I care? I'm gonna rent these rooms out for 12, 2,500 a pop. Like, you
Right.
know what I
Right.
mean?
Exactly. Mhm.
But this industry is crazy. But I'm gonna come to you for a modular home because that's all I want. Like I want that for me. My kids might want that or whatever. But
Mhm.
yeah, I want. I'd rather do it that way because it's fitting for me. I'm more interested in land than I am about the home. So I'm okay with having a smaller space on bigger land, but customized to my needs.
Right.
That or fixing up. I'm down with the fixer upper too. I have no qualms about that. Like if it's possible for me to live here and then get a loan for a fixer upper from you, and I will take the time out. Whatever time they need to fix it, live here. I don't know, however, but
Yeah.
that's my goal. It's either one or two or both. That's my personal goal.
Right. That's how you make that sweat equity. That's right. Because
Hmm.
I just wish more folks would look into that. I really do, because they can really
Hmm.
find something, and with little time and patience, right, they can turn into what they really want. Right.
Hmm.
It's
Hmm.
just a lot of folks don't want to go down that road, but that's okay. But yes, most definitely.
Hmm. I regret not doing that with my first house because I was being redlined so much. But there were houses that I saw. I'm like, yo, fuck that house. That's crazy looking. Even here, there was a house down the street, and it was structurally there was nothing wrong with the house. It was
Mhm.
come to find out people were selling weed illegally out of there, so they just shut the whole thing down.
Oh
But
wow.
nobody wanted it, and it was an eyesore. I didn't think like, hey, I could have gotten that particular loan to fix it up. I mean, it had a pool and everything. It was you could see inside the house. Like they took care of it. It wasn't like the walls were torn down. It just looked worn and torn. That's all it was. But yeah.
Oh
Hmm.
wow. Wow.
Yeah.
Okay.
But yeah, we can wrap up, Sean. We can wrap up for sure. So just take us out. Don't forget, could you remind everybody how they can reach you, what states you cover, and all that good stuff.
Gotcha. So you can catch me My cell number to me is area code 702-809-9401. And my email address is Sean, SEAN, the letter R, at Barrett, BARRETT, financial.com. Now, currently I'm licensed in the states of Texas, Alabama, Georgia, South Carolina, Florida, Virginia, pending, well, California just popped, I think, recently, pending Maryland, DC, Tennessee, and Mississippi. That's in the first round. So the second round, I'll probably do another few states. Hopefully by the next 90 days, I'm in all 40 states. Or 40, I would say 40 is what I want to touch. There's a few states that don't really do much, but hopefully I'll be in most parts of the country.
Excellent. Excellent. Well, thank you for that, Sean. And just so everybody knows, all of Sean's information is also in the description. Be sure to, if when you're ready to go, reach out to him, even if you have some questions. We would rather you get the right answers than just guessing and getting mixed communication from everybody. You know, I'm big on that. But in the meantime, thank you again, Sean, for having this weekly show. I know it's helping a lot of people. And I look forward to seeing you again next week.
All right. It's been a blessing. Thank you guys for having me. Thank you so much.
All right, you guys, I wish you guys the best of luck on your credit journey. You guys have a good one.